Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Monday afternoon market recap. It has been that of a relatively quieter session to what we have become really accustomed to. The Dow Jones Industrial Average is up 85 points. We still have roughly 45 minutes left in today's session. However, we are starting to see a couple of interesting signals which I am going to go through with you. Now, this is really just going to address the Dow, the S&P, and the Nasdaq. Our top 12 individual trade list today more or less moved sideways. And a lot of what I spoke about over the weekend when it comes to the trade management, all right, potentially culling out of a couple of those profitable positions is very, very true as at, this current junction. Now, moving back into the industrial average, you can see for yourself that we're starting to establish that of a shooting star candlestick. And really, a lot of the narrative that we spoke about, well, how is this market going to move as we move all the way back on up and close this open window? We have to be prepared as market analysts and active market participants to at least expect pullbacks. And the pullbacks are going to be met with another buying opportunity moving forward. Now, the Dow itself suggests once again that we are going to move into potentially that of a slight pullback. We don't necessarily have to. I've seen these types of moves, or at least candlesticks, play out a number of times before, and just as easy as I can say, be prepared for a pullback. Tomorrow when we come into the day, we could just see these markets push to the upside. What is very important, however, to understand is that we do appear to be making that of a W bottom, or at least that of a double bottom. And also what you need to be prepared for is the potential that if we do continue during Tuesday's session to the upside, it may begin to look something like this in terms of, the grind moving further upon up to 26,435. Now, I wanted to speak about the Nasdaq. The Nasdaq is quite interesting because, relatively speaking, if you pay attention to where we are on the industrial average and how far away just this gap is at the moment, and then you compare it to that of the Nasdaq, you can see that the Nasdaq is very close to actually filling this gap. You can see our target up here, 7,467. We're already trading above 7,400 as at this recording. So we only have roughly 65 points. And if you go back to the weekly chart, really, the week last week, we closed up, 180, 190 points. So we could actually hit our target on the Nasdaq very, very quickly. And then if we do this, it sets the stage for that of a sort of, slowdown up and around the 7,500 area. If the Nasdaq pushes up into this respective resistance area this week, and the Dow and the S&P are relatively unchanged to where we find ourselves trading at the moment, they are going to move on up over time to sort of come back into alignment with the Nasdaq. So it gives you a little bit of peace of mind that if the Nasdaq continues to rocket, and this is obviously helped by a lot of those tech companies breaking out above their respective areas, well then the Dow and the S&P are just simply going to have to play catch up over sort of a longer duration. So we're going to monitor this. It's very interesting because also the Dow has broken above its pivot dating back to April, or at least the midpoint high of April, and so has the SP 500. So technically speaking, we're all very much so bullish. Nothing has changed on that front. However, again, during Monday's session, we have seen that of a relatively sleepy session. We haven't seen any sort of long day white Morobozu candlesticks. In fact, we have that shooting star candle on the Dow Jones Industrial Average not really showing up in the right location. And on the S&P 500, we have that of a spinning top as well, which is reflecting a little bit of short-term indecision. They are not in and of themselves reversal candlesticks. You have to put these, within the larger picture of the analysis puzzle. And really what this just suggests is that we're entering into a potential period of uncertainty, i.e. there may be a couple of sellers lurking about on the S&P and the Dow, trying to drive it down a little bit further. But interestingly enough, if I go back into the industrial average, we did establish today's session with that of a gap, but we did close it too. So this is all happening, relatively quickly. It's good that we don't have any legitimate gaps, so to speak, on the industrial average. So it means that we don't have to close anything. And again, that magnet is still drifting and pulling these markets on up higher, okay? This area here at 24,750 was resistance. That now becomes support. And also what you should pay attention to, if we are beginning to enter into a trend, and this is entirely possible, what you should begin to see are the exponential moving averages hold as support. Now, again, this is a little bit premature, so to speak, because technically speaking, we are still in a sideways market move and we haven't broken above, the last major macro pivot high. But at the same time, if this is a legitimate break of this swing high here back in the month of April, if we were to technically come on back down, we should see these exponentials, which are grouped together really nice and tightly, begin to act as support, and that will also establish that first high low moving forward as well on the industrial average. So think about that. Again, a lot of our top 12 stocks are a little bit sleepy today. That is expected. They did price in some tremendous returns last week off from this pivot. Okay, after this intra-week sort of reversal, which set up a number of weeks ago, and you get these types of sessions from time to time. Don't overthink it. Just let it be. And we'll be prepared, obviously, to see what happens on Tuesday. And again, think about the trade management of our top 12 individual share list, okay? Also, I just wanted to throw in there, you should be out of PayPal too. So if you took the PayPal trade, you can see today, we've got this little dragonfly doji, which set up on Friday last week. And we have another spinning top right at this resistance area as at Monday. Now, again, we still have 30 minutes left in today's session, but PayPal, for instance, may put in another wave rotation back down to support. And guess what we'll be doing if we come all the way back down to 72? Okay, we'll be looking to buy. And ultimately, if this bull market continues, we're going to have the apex move, all right, which is going to be a measured move from support at 72 up to 84. That's about $12. And then we can begin projecting that from the breakout pivot at a later date, which can potentially put this up as high as $90 per share. So that's something exciting moving forward. But at the moment, again, it comes back into trade management, learning how to cull positions, move out, or at least liquidate some of those open positions, bank some of that profit. And then if the market does pull on back down, we can begin loading up on some strategic entries, not only on the market indices, but also on other individual stocks as well. All right, so that's going to do us as at this Monday. Nice, brief, relatively concise and short sort of market update. If you have any questions, please email me, success@pivotpoint-trading.com. Enjoy your evening. I'll be back with you later in the week for some more market addresses. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.